or sell the S&P 500? First off, read this disclaimer carefully. Then do your good deed of the day by liking and subscribing. So the S&P 500, it's a fairly known stock market index. The USA is here. The index is 17% from the 52-week low, 15% away from the highs. So let's start now by looking at the charts. This is like big picture weekly data points. We have seen a pretty impressive rally. The caveat is that we are approaching this problematic level, the green 50-week moving average. It has stopped previous parties. We can see now that the bulls have been on a rally now for, so back here it was 56 days, and then the party was over. And now if we measure from here, 63 days. So the previous time we had this kind of extension, we saw a pullback. If we look back here, it was much shorter. So even though there's been strength, the question is whether it's sustainable or not. What I find rather interesting is that the bulls have been able to smash through this red 200-day moving average. It was the fail level back here, just a magnificent time to go short. You see here that on the 30th of November, the bulls closed above, and they have been able to close above that moving average now. So even though on Friday we did actually dip a bit below it, there is some strength here. But obviously we do have some bearish activity as well. Looking at weekly RSI, we are now at the same level we failed previous time, and also back here as well. So the two previous counter trend rallies failed at this level. Looking at the purple 20-week moving average, we see the same thing. If we go here to the daily data points, accumulation distribution is very strong. There's definitively buyers supporting this rally. Looking at RSI, the previous time we had a major rally, we did actually go higher on the daily RSI and also on these PPOs. So looking at the green 50-day PPO, we are close to the level where we failed before, but we're not fully there yet. So there is some interesting activity here. So in my notes, I write 50 weekly moving average resistance, but we do actually have a 200 daily moving average breakout. I think I will give the bulls a 2 here, and not a big score, but the bulls are doing something interesting. But when we looked at an RSI and these other indicators, the bulls have pushed it pretty far. It's sort of like, how much is left, really. When we go to the seasonality data here to the left, over the last 5 years in green, 7 years in blue, 10 years in red, we do see that the seasonality is pretty strong into the 27th of December. And we're still early in December, so the seasonality here is indeed bullish. Looking to the right here, you can see all the data going back to 2003. November is a very green month. It's rare for us to have a down month in November. December, it's more green than red. But it's a bit more mixed, at least recently when it comes to December. But it is a pretty strong month. So in this case, I do think I will give the bulls a strong 7 here on a seasonality. They really have a good setup. So the seasonality definitively could embolden the technical bulls as well to push higher and challenge that 50 weekly moving average resistance. When we compare the S&P 500 with the WT, which is the total stock market ETF, we do see here, if we go to performance, that year to date, the WT has slightly underperformed the S&P. Beta is a bit lower, not much. Price earnings, however, is significantly lower, 16.5 versus 21.7, so more value. The yield is a bit higher, 160 versus 122. Looking at the holdings, obviously the WT is way more diversified. Looking at the sector breakdown, yeah, they are relatively similar. A bit more yeah, exposure to mid caps here in the WT. So I think I will give this one a bit, yeah, to the bears. There's simply more value here in the WT, and there's better yield. So those who are into fundamentals, they might consider rotating a bit into the WT. Let's here compare the S&P 500 with the WT. Looking long term, we do have a 96% correlation. We have 83% with VGK, which is the Europe stock market ETF, and we have minus 12% with China. Looking at the daily data points, we do have 97% with total stock market ETF, 80% with VGK, and 36% here with China. So the strongest correlation short and long term is with the WT. So let's have a bit of a technical analysis here of WT, the total stock market ETF. We see a bit of a similar pattern. In this case, we have seen counter trend rallies back here. That was temporary. Also this one. This one is of a similar duration. So we have that same pattern. The green 50 week here is, you know, a resistance level, but we don't have a lot of interaction with it. So it's not necessarily something to make a big deal of. The 200 daily moving average in red is a big deal. It was resistance back here in February. Now we do have a confirmed breakout. So there is progress on the technicals. Looking at RSI, we actually do have we have established a higher level here on the weekly RSI. A bit of a breakout, so that's bullish. Looking here at the daily data points, the previous rally, you know, see back here in August was actually higher on RSI. Also, this rally here from back in November 2021, it was also a bit higher on RSI. As such, the bulls could push higher before we see some, you know, before they get more spooked. Okay, so let's now compare the SPY with the WT like that. So now we are looking at relative performance. So we can see that the S&P 500, it has outperformed the WT for some time. We have pulled back now on RSI to a supportish level. That has a tendency to flip to the SPY, continuing the outperformance. Looking here at the dailies. Yeah, maybe a bit more noisy level here on the WT on the dailies. Let's look a bit here at the seasonality for these two. Yeah, the S&P 500 usually outperforms. When we look here at to the right here, we do actually see that the outperformance has not really been that clear in December. The most recent years we actually have seen the S&P underperform in December. So that's a bit of a I think that overall, when it comes to relative performance, there is some interesting data. I think I will give the bulls 4 here. So we do end up with 2.5 to the bulls. So we are at a 50 weekly moving average resistance level, but we have been able to break out above 200 daily moving average resistance. The seasonality for December is very strong for the S&P 500. So the bulls, they do have a pretty good setup. We have some time left. Let's look at the components of the S&P 500. Here is Apple. The chart here is just noisy. There's a tons of noise here. Yeah, let's continue down the list. Noise is not easy to trade. Next is Microsoft. Yeah, we do have a breakout here above the purple 20-week moving average. That is initially interesting. Breakout above the 100 daily moving average, but we already have a bit of a move ongoing here. Let's quickly look a bit here at the seasonality. Yeah, usually a bit more strength here to the left, to the right here. December usually is a green month, at least since 2015, so that's bullish. Looking at the fundamentals for Microsoft, price book ratio is actually The price book ratio, price to sales. If we go further back here, we can go all the way back here to 2016. Well, in that case, we are not really at that high level. Well, at that low of a level. Compared to 2020, we are relatively lowish with price earnings. It's not that bad, but this is not like deep value. Let's look here at Microsoft. Let's go here and look at the price projections, the forecasts for the coming year. So we have 42 analysts covering the stock. Average price target is 15% above us. That's pretty bullish. Yeah, that's bullish. So I guess Microsoft is a bit of an interesting bullish candidate, but there's already been a bit of a move here, so it's the timing for a bullish trade is not like amazing. Let's go to Amazon, the next on the list. Amazon is really at a low level. We could see that this is a horizontal support. There's a lot of price action around here. That's interesting. If we have some of these indicators here, let's do it like this. So you can see here that there's a volume shelf at this level, which is rather interesting. Okay, so let's look a bit here at the seasonality for Amazon. Usually some strength into later December, but when we go here to the right, we do actually see that. So you can see here that the sum of all of these numbers is bullish 2%, but when we actually look at the seasonality here, we see that December usually isn't that strong. That's why it's important to combine both of these two perspectives on seasonality. Here we can see the fundamentals for Amazon. Yeah, if we go quite a way back, the price book ratio is actually pretty decent here for Amazon. Price to sales is also, so there's value in Amazon. Something that was in the news now is that Amazon has seen more competition from like Walmart than was expected. The average price target here from these 47 analysts is 44% above us. So definitively we have a strong buy here. Here we can see some of the fundamentals. Let's go to the ideas. There's probably a bunch of comments here on Amazon. It's such a so here is someone who is long. Great buying among fears. So you've got some price projections. I'm not a fan of like technical price projections. You just have to let your stop level determine how long you're going to hold on to any position. So if we look at Amazon now and you go like, I think this looks interesting from a bullish perspective, except that I don't like the seasonality. That was not something I really liked to see. However, this is a case where the stock has pulled back already. So the question is whether, because of the pullback, maybe it's already sort of priced in the bad stuff, that the bearish December seasonality is not necessarily going to be such a big factor. I like the valuation though, so that's interesting for Amazon. Let's quickly look a bit at Google or Alphabet. Yeah, support here from the red 200 weekly moving average, so technical support. A bit of an inverse head and shoulders pattern here on the daily technicals, but we do have the blue 100 daily moving average above us. Seasonality is a bit bullish into December. Looking at the seasonality here to the right, very bullish for December, so that's bullish, obviously. Here we got the fundamentals. Price to sales ratio is pretty good. The lower, the more value. Price earnings also not too shabby. Price book, not deep value on price book, but there's something here. Let's look here at the price targets. 44 analysts are covering the stock. Average 25% upside price target. Strong buy, and yeah. So all in all, this looks pretty good here for Google as well. But yeah, so we have looked at the S&P 500. All in all, it looks bullish, but it's more of a question if we are going to get that last push or not. A lot of the bullish move has already happened, so the timing is not ideal. We also looked at some of the underlying stocks in the S&P 500. I think of all those we looked at, Amazon looks pretty darn interesting from a bullish trade. So yeah, and the direction, they have these new ETFs leveraged for trading Amazon, both bullish and bearish. So that's something to consider. But yeah, all in all, things looks interesting. But the issue with the market now is that we have a lot of moves that are in development. So the timing now for new positions, it's not as good as it was not that far back.